do like a step-by-step run through on how to use the simulator. Mark, maybe you might be able to speak to it a little bit better than I can. If you want to go ahead and tell us exactly what we'll be doing today. You're muted.
Oh, thank you. Can you hear me okay?
Yes, perfectly.
Okay, great. Yeah, so I thought today it might be fun just to kind of catch everyone up on where we're up to with this sort of visualization application that I've created for basically as an educational resource, I think, so that people can see in a very visceral way how Carbon compares to other protocols, both in terms of its financial performance, and there will be specific cases where Carbon performs better than its competitors, and there'll be specific cases where Carbon's competitors perform better than it. And it's important to focus in on precisely which types of trading strategies Carbon appeals to and which ones that it doesn't. So I think that that's important in identifying the niche, right, that Carbon currently occupies, because it is alone, right, in its offering, whereas the competitors all tend to appeal to exactly the same thing. So they're competing with each other, but Carbon is attempting to do something else. So there's that component. The other thing is obviously the mechanics of Carbon, right? If it is doing something that's different to its competitors, then how is it doing that, right? What does it look like? And it is naive to assume that everyone is going to be able to digest the formulas and the code and things like that. And so what I wanted to do is to create something that is a little bit easier to engage with, and that's also kind of fun to engage with, right? So that you can kind of do do things yourself and see what the results are and in a way learn about trading. Not just about DeFi or DEXs or anything, but also like what are different trading strategies and how do people make a living out of this, and what are those strategies designed to do, and how can they fail, and everything else. So yeah, on today's call, and I think it's possible that I can share my screen, I think we're just going to basically have a look at the simulator and take a request to download a particular price chart, and then process that price chart and have a look at what the results look like on Carbon, Uniswap v3, and Uniswap v2. And then we're going to see what the outputs are, how you can use them, and if you're educating yourself or educating others, how you can use those outputs, because there's a bit of variety there. Does that sound good, Jen?
Yeah, no, it sounds fantastic. We might even have some people on the call who have downloaded that themselves. So if you did, I see you. I won't call you out, but if you were able to, please post it in the live stage calls so that we can use your example as well. I know that that was something that you wanted to do. If we can do it as a group here and do a walkthrough, would love to do that. Otherwise, if you want to put your hand up, you can speak to it also. Cool. Mark, go for it.
Okay, what can you see right now? Can you see my Firefox?
Yes.
Okay, great. So do we have
blurry.
Is it? Not. I'm afraid there's probably not much I can do about that, but that's okay. I'll comment. My commentary should make it clear what's happening.
Perfect.
So the first thing we're going to do is we're going to go and download. So I mean, maybe just like almost to prove that the simulator does what we say it does, and that I'm not sort of showing you preloaded data or cherry picked data or something. I was hoping we could get like a bit of audience participation. Maybe someone who's here to actually, who wants to see the simulator run. Maybe they've got a particular price chart in mind or something. Can we get can we field some suggestions for which price chart we should go after first? Preferably something that's that we can measure the price of in USD. Jen, have you fielded? I know you spoke to people before the event.
I did, and I'm looking to see if maybe he is going to put his hand up. Otherwise, I sent him a message. Maybe he'll go ahead and share whichever it was that he was looking to share. Okay, so he said MIM has interesting price action.
Yeah.
So
Okay, let's have a look. I think that's Magic Internet Money on CoinGecko. Here we are. Cool. Okay. So this is I've got Doc Reader, by the way, so it will probably look like this to you usually. So I'm just on the CoinGecko page, and there's a couple of different ways you can get price there, and this is just one of the ones that I support, and it's also I would say one of the better sources of price data, especially for doing carbon style simulations. It's not at all good for doing Uniswap v3 simulations because it's basically just going to give you the data points that allow this chart to be drawn. And what that misses is a lot of that sort of intraday volatility that allows Uniswap v3 fees to accrue. So if you're getting a price chart from CoinGecko, just be aware that it's not the best, but I can show you a hack at the end of this presentation that will make it better for estimating Uniswap v3 returns and things like that. So the first thing you're going to do is after you've chosen your token, go ahead and hit this historical data tab. And that's going to give you this enormous table. It's got some volume data in there, and we can use that to our advantage later. It's also got open and close prices. And if you choose a range up here, you can filter this table and scrape it directly from the website. CoinGecko also has an API that you can use. But for most users, I'm assuming that exporting it as a simple CSV is probably going to be the most accessible thing for them. So if you scroll right down to the bottom of this page, and you see this little button that says export as, choose CSV, and that should begin the download. I'm just going to open it quickly so that we can see what sort of data is inside it. And you can see here that it actually gives you a fairly truncated version of what used to be there, right? Or at least what the page shows. So you get a timestamp, you get a price. The market cap is apparently 0 for quite a while. And you get a total volume. Now we can use this volume data, like I said, to create a little bit more data than is here, or at least estimate intraday volatility. But if you want to, you can just use this price column. It's totally fine. So this CSV file, I'm going to save that, where it downloaded from me, okay, is right here. And I'm going to move this to a new location where we're going to be able to perform a simulation with it. And I will show you this in just a minute. So I'm just going to put the MIMUSD one here, and then we're going to go ahead and open the simulator. Now the simulator is built to run out of something called Jupyter Notebooks. And for those who aren't familiar, after you've installed it and open it, it's going to run this terminal, and this terminal is pretending to be a web server, and that allows the notebook to run directly out of your browser. But don't make a mistake of thinking that this is dependent on internet access or anything like that. It is a completely standalone thing, and all of these directories that you see are the actual directories on your computer. So you can see here, if I go to OneDrive, and then I go and find that that folder where I just put it, you can see here I've got that that MIM USD CSV that we just generated on CoinGecko. So the first thing you're going to want to do is start this this program called Simulation Start GUI. Okay, and there's a lot of code here, and I'm gonna put these things into modules and import them separately. I haven't done that yet. But really, the only thing you need to do is scroll all the way down to the bottom, and you'll see that there is this command right at the end that says start information equals get user input interactive, and then there's a file in quotations. And that file that we're going to use is the file name of whatever CSV that we just downloaded, right? So we just paste that file name into here. And then we run the entire notebook by clicking these double arrows at the top of the page. So we agree to restart and run all of these cells. And what that's going to do is give us this interactive chart, right? Jen, can you see that okay? Is it better if I make it a bit larger like that?
I can see it okay. I was told to tell you to adjust your screen to 30 FPS if that might help. For the,
Um,
let me see, adjust your frame rate. That might make it a little bit clearer. At certain points it's clear, at certain points it's not. Whatever you just did worked. Did you just do something?
I just made the screen, the zoom slightly larger on my browser. And I'll try and
Okay,
adjust the
that
frame
works.
rate later. I don't know
No, that worked.
if this
Whatever you
is
did, it made it
okay.
clear.
Okay, good. Okay, so this is just the line chart of the data that we just read from CoinGecko. And so this slider here allows you to like zoom in on a certain part of that chart that you actually specifically want to simulate. It's worth noting here that we're getting the slice information down the bottom, and we've got price data on the side. This this range down the bottom is important to note because this is going to be the number of frames that your animation includes. So if we go all the way out and just use all of this information, we're going to be having something just shy of 600 frames in our simulation, which is fine. I'm happy to use that. But there'll be times when you download information from CoinGecko and you'll have like 10,000 data points, and that's going to be a very, very large GIF that gets generated, and it's going to be a very large number of separate PNG frames that get printed. So I don't recommend doing that. So maybe for the sake of this demonstration, I'm just going to make it nice and small so that we don't have to wait too long to see what happens. Now, after you select your range, if you hit this OK button, you'll be taken to the next panel where you will be invited to play with these sliders, which will let you choose your Uniswap V3 style portfolio. And so here you can see I can select essentially any range I want. This isn't a true reflection of Uniswap v3 in the sense that it's not tick-based. So it will, you will give you whatever resolution you want, imagining that Uniswap has an infinite number of ticks, which, if anything, is probably a slightly less. It gives you more power as a user to make a decision than the constraints that are currently on that protocol. So I don't consider this to be, something that would mischaracterize or misrepresent the productivity of the Uniswap protocol specifically. But remember what I said before, if we're using just this simple price chart, we're going to miss a lot of volume. And that's something that we can talk about at the end of the presentation about how to adjust for that. There are other sources of data that you can get, both like the high, low, and close price, and those sometimes are a little bit better at capturing the type of volume that you would see for different parts in the market. But I am working on a way of using the volume data directly in order to basically flesh out the price chart with more data points, which is something that I presented on the whiteboard not too long ago. So I think this is probably a pretty, like most Uniswap v3 providers, I think would be pretty happy with something like that, right? It goes out of bounds occasionally, but only briefly, and then sort of comes back into range. And this is where they, the longer they stay in range, the more profitable they are. So there's only about 6 cents of spread here, so or 6 cents of compression for their liquidity, and I think that that's a fairly concentrated position. So again, we hit OK, and the very next panel that we're presented with is going to split that range in half, or at least geometrically in half, and it's going to invite us to then play around with 4 different sliders, and these represent our carbon ranges. And so if you don't touch them, then essentially you've got a very good heads-up comparison. Again, except for the volume data, that if you had good volume data, then this would be an exact 1-to-1 heads-up comparison of carbon versus Uniswap for that same range. And so if that's the sort of thing you're interested in exploring, right? If you've got a particular strategy that you do want to that you do want to simulate to work out which protocol is the right one to use, then if you just click OK straight away after moving to this panel, then I think that that's a good way to go about doing this. But if you wanted to simulate something else, so for example, what it would look like if carbon was had a slightly larger spread here. Maybe we want to move this part up here and capture some more of this activity. Then you can do that, right? There's it only suggests your starting carbon position for the sake of having the the most robust simulation condition, but it doesn't require you to use it. So what I'm doing here is I'm just trying to choose something here where we're going to get some interesting data. So I want like as many crosses across this boundary as we can get, and I also want to be able to capture some of these like deep eggs, which is something that that carbon is specifically good at compared to other concentrated liquidity protocols. So I think, yeah, maybe something like this might be good, or it's. I'm probably just being pedantic at this stage. So what I'm going to do is I'm going to this back up. Otherwise, people are going to accuse me of being, using knowledge of the future to create an artificially good position, and I don't want. So let's stick with something like this. We're getting a good number of crosses. It's comparable to this position, but not the same. But whatever, right? You can choose your own conditions. Now, in the next panel, and this is a feature of Carbon that we haven't spoken about in a lot of detail, so I'm not going to spend too much time on it now. But after you've chosen a range on Carbon, you can actually choose your starting position inside that range with the liquidity that you're providing. So just because you have price bounds at X and Y doesn't necessarily mean that you need to start your position at that price. You can actually choose any price inside here. And this is I would say a fairly sophisticated feature, and it requires I'd say a very good fundamental knowledge of how Carbon works in order to use this feature well. And so for brevity's sake, I'm not going to get into it in too much detail today, but maybe that's something we can talk about on a future DAO discussion, right? It's very, very good for things like breakout trading and other things where you might want to catch something at a certain price and have your other boundary correct closer to the market price as a result, things like that. So we're just going to use whatever it suggests. I should point out here that it won't let you create a position that would be automatically arbitraged. So here, the price within the red zone, within the selling zone, is actually forced to be a minimum of whatever the current market price is. So because we cut the price chart over here, and that's where the price starts, it's actually going to tell us we can't start below that, because that would mean that the position is immediately arbitrageable. Obviously, in Carbon Pure, right, in the way that we actually release it, that's something you can potentially do if you wanted to. Like you will be allowed to do that, but the front end will warn you that you're about to do it. But this is actually one of the things that can be used for like flash liquidations and other things. So I don't want you to think that because the simulator won't allow you to do it, that it's impossible. It's just something that I'm discouraging, so that we get good simulation results and people don't accidentally, throw the simulation in a bad direction by accidentally setting the price too high or too low to start. After you've chosen these ranges, you can then set your weights, right? And this is just to say that when we choose the starting portfolio value, which is going to be denominated in USD, these weights will tell you how that portfolio should be distributed. So if I set this 1 and 1, it just means put an equal weight, an equal amount of value on both my TKN side of the portfolio and my USDC side of the portfolio. If I say 2 to 1, then this means that the TKN should be worth twice as much as the USDC and so on. So there's no like right or wrong way to do this. It's just one of the things that you have to take into consideration when you begin that simulation. The portfolio value speaks for itself. I'm just going to use 10,000, which is what I tend to use for everything. It doesn't really affect anything because we assume an infinitely deep market when we're doing these simulations. Again, something I'll speak about in an upcoming blog. The protocol fees component is really, really important, especially for things like Uniswap's productivity for the user side. And this slider will bring you anywhere between 1 basis point and up to 100 basis points. And I think somewhere around 20 to 30 basis points is generally what I recommend you simulate at. This is fairly close to where concentrated liquidity protocols operate today. And so that's where I recommend. But if you out of curiosity, wanted to simulate something like a 1% swap fee, or a virtually non-existent swap fee, this simulator will let you do that. I've just had to put bounds on it so that we don't end up with a whole bunch of meaningless results that people are generating. I wanted to keep this quite reasonable, and because Uniswap V3 is contingent on fees, I didn't want to make it too easy to set it to 0 or something and end up with giving these other protocols a bad name. So after you've chosen that protocol fee, you can then choose which protocols you want to include. We've got Carbon, Uniswap V2, and Uniswap V3. I'm going to include all 3 for this instance. And after hitting OK, it's going to ask you whether or not you want to animate it. Obviously, you can only check one of these boxes at a time. We are going to animate this, and then we're going to hit OK. And that is the very last step to setting this up. So the whole point of this program is to just get the user inputs and arrange them in such a way that the actual main simulator can understand it. And what that does, when you push that final OK button after you've chosen whether or not you want to animate it, it generates this file here called start conditions, right, in big capital letters. And then it will have the name of the CSV that was used to create it, followed by the file extension .pickle, which is just a binary file that is very convenient to use in Python. Now, at the moment, after you finish that GUI, you then need to start up this next simulator. I'm hoping to sort of merge these 2 processes together, but it's still fairly easy. You just open this up, and again, you flip all the way to the bottom, and you're going to find a command that says run simulation, and all it's asking for is that that file name. So you take whatever that thing said, start conditions, underscore the name of the price chart that you used, .pickle, and then again you hit these 2 double arrows, restart and run all of the cells, and hopefully this should start working. Now, this can take a little while because this is going to start filling up with PNGs, and I'll show you what that looks like by clicking on one of these. Right, so you can see it's creating individual frames for this animation, and so it's going to go through quite a number of these for all 3 protocols. So you can see that each one of these PNGs, it starts with the name of the CSV that we downloaded, and then underscore the name of the protocol that this particular performance data belongs to, and then underscore followed by another number, which indicates the frame number. And so you can see we're generating this for Carbon up to basically whenever it is we run out of data. We're generating it for Uniswap V2 at the same time, and we're also generating it for Uniswap V3, which should be down here somewhere. Okay, so we've got frames for each one of these, and it's going to basically keep going until it's run out of frames. If you are running this directly out of your browser, like I am here, and you're doing this on a Windows machine, you'll see that there's a little hourglass in the tab, which lets you know that the simulation is still running. And if you're on a Mac, I've actually found that hourglass doesn't exist. I'm not sure why, but it doesn't matter because in that, oh no, what's happening? Okay. In that cell where it's got this little in thing, there'll be square brackets with little asterisks in it. And that little asterisk will tell you that it's currently running everything. So I think I screwed this up by opening up one of these PNGs while it was trying to run it. And so it didn't have that available to it. So I'm just going to run this again.
That's a good thing to know, because I didn't know up until now that you couldn't open a PNG while you're running it. So no.
Yeah, well, I mean, you can, but yeah, I mean, you can do it. But basically, if it needed that file at the time that I was looking at it, then it's not going to be able to do anything with it.
Right.
Okay, so while that's running, let's quickly go through. Let's quickly have a look at some stuff that I prepared earlier, so that we can just see what it, what this stuff looks like. Yeah. Okay. All right. So it generates a couple of different things. So I have created. So this is obviously not the MIM one. I'll show you the MIM one after it's finished. But this is one I did for that sort of sinusoidal, price chart. And you can see this thing stops. I stop this. Okay. So you can see it generates the price chart in the top left, and it also shows those liquidity ranges and how they adjust, right, as the price moves around inside them. And so here you can see the distinctive character of carbon really shining through, which is rather than let the liquidity that's being purchased and sold move the other thing's liquidity across the entire range, it will only do it up to the border that's defined by the user, right? So this is the the sell high range, and that sell high range is defined in such a way that it is distinct from the buy low range. Whereas on Uniswap V3, okay, the buy range and the sell range is one and the same thing. Okay, and so this is why you'll see these files get produced with the annotations symmetric concentrated liquidity and asymmetric concentrated liquidity with carbon in parentheses on the ladder. So this is what symmetric concentrated liquidity looks like. And I think that this is a fairly good, visual for understanding these protocols. You can see very, very clearly that as the price moves through this range, it flips from green to red. And then when it moves back up through this range, it flips from red back into green. And the border is always exactly where the price currently is, right? And this is exactly the way that Uniswap V3 behaves. Let's have a quick look at Uniswap V2. So here you can see I've actually fixed the depth chart, right? So in a couple of examples that I've shown earlier, this depth chart wasn't working correctly, but it is now. But you can see it has that exact same behavior of wherever the price currently is, that is where the green liquidity is being converted into red liquidity and vice versa. The only difference is with V2 compared to V3 is that the price ranges are infinite, right? And this is why this depth chart just never runs out of liquidity, right? It doesn't matter how far the price moves, there will always be 50% of its liquidity on one side and 50% of its liquidity on the other side. And this is true at all possible price points. This is how a hyperbola, or using a hyperbola as a pricing curve actually operates. And then again, last time for carbon, before we have a look at the MIM files, you can see just how dramatically different this is. It's got that same behavior of concentrated liquidity, where there is a limit to how there is a limit to the width available for the liquidity that you've provided. But what's different is that the green part and the red part are separated. Right, they are asymmetric. They have an influence on each other, but it's not equal and opposite. And that's the key difference, right, between a typical concentrated liquidity protocol and what it is that we're building. It should be important to note that as well. We've got this performance versus hodl chart in the top right, which I find extremely helpful. Obviously, this is a very unnatural price chart, so don't use this as like a evidence for why Carbon outperforms any other protocol. I mean, it does under these circumstances, but these are exceptional circumstances. Let's have a look at how MIM behaved. Okay, good. So that's actually finished. Okay, so it's generated. It's generated some GIFs for us. So here are the hundreds of PNGs. What I usually like to do is just arrange this by type, so I get the GIFs all the way at the top. So the first thing we'll look at is Uniswap v2. Let's zoom up. And so you can see this is doing exactly what you would expect a constant product liquidity pool to do, right? MIM is a stablecoin, and so the price doesn't really move anywhere. And it's from looking at this type of visualization that you come to understand precisely why protocols like Curve exist, right? And what the motivation for creating their augmented, extremely concentrated bonding curve was. And it's because look at all of this liquidity that's never used, right, on either side. It's very, very, very inefficient. This is kind of the poster child for capital inefficiency when it comes to AMMs. But having said that, it's still doing stuff, right? You can see that as the price, oscillates around a little bit, even though it's not very far. You can see in the bottom right the earnings that you're getting as a liquidity provider. It's pretty hard on V2 to actually see this, but if you pay attention to the way that the numbers on the y-axis move, you get a fairly good idea of what that fiat accrual rate is actually like. Okay, so that's really boring. Let's have a look at Uniswap v3. Okay, so here you can see Uniswap v3 doing what Uniswap v3 does quite well. Right, we've got a range here, which is the one that we chose, and as it oscillates back and forth, this spread, which again was the fee that we chose for this protocol, is essentially being earned by the liquidity provider every time the price crosses it. And so you can see when the price is completely outside of this range, we've only got MIM in this case. And when the price is starting to move into the red range, we're getting a little bit more USDC liquidity and so on. And you can see in this chart, in the top right, just how profitable this is, right? And I would say that this is pretty good, right? This is one of the pairs that makes a lot of sense on Uniswap. And so you can see versus HODL, right? It gets over a 1% return fairly quickly, whereas in Uniswap v2 that would have taken like geological time periods to get that level of returns. So yeah, that's Uniswap v3, acting symmetrically, doing what Uniswap v3 does. Let's have a look at Carbon. Okay, so Carbon, we've got you'll notice that there are some very distinct differences here. One is that we can keep the liquidity out of range for a very long period of time. And so as the market price is kind of dancing around in this region before reaching our targets, nothing's actually happening, which is distinct from how traditional concentrated liquidity protocols would operate. And so what you're really doing with Carbon is you're waiting to catch those very volatile moves, right? When you've got the opportunity to buy MIM at its DPEG, and then sell it at some higher rate when it spikes higher. So you get a lot less volume through Carbon, but you can see here that it got to about a 1% return, fairly quickly. But yeah, again, it's these types of stablecoin pairs, you're probably better adjusting these ranges so that you can get something that's much more sort of Carbon specific. Whereas what we've done here is really sort of try to create something that I'd say is reasonable or Uniswap v3 leaning or something like that. But yeah, so we can do things here to compare these. It's also worth pointing out that in this particular demonstration, Uniswap v3 is actually coming out ahead of all three protocols. I think we saw
Mark, quick
there.
question.
Yeah.
It looks like the spread, now that you've got UniV3 back up, or the concentrated liquidity, it looks like the spread is a lot less. Is that just the way that it's shown in the animation, or is it larger? Did we choose a larger spread on
Yeah.
carbon?
Well, on carbon, the spread is almost always larger because in Uniswap v3, the spread is always equal to the fee. And I think in this case, we set the fee, somewhere around 30 basis points. So that spread is always 30 basis points on Uniswap v3. Whereas on
Okay, let me.
carbon, the spread is actually determined by where you set your range and how far away your range is from from being full again, right? So if we come back to some of these ones that I prepared earlier,
Maybe that's
right?
what I. Yeah.
You can
Go
see
ahead.
here, yeah. So you can see here that the spread on carbon is not constant, right? It really depends on how performant your position has been, and that's why I created this like oscillator, so that we can see exactly what that sort of behavior looks like. But that spread, right? It's always changing. Whereas on Uniswap v3 and Uniswap v2, by the way, that spread is always the same. Because we've got quite a large price range here, you can barely see it, but there is a gap between the red and the green zones here, and it's always equal to 30 basis points. And you can see it maybe a little bit easier in the bottom left chart. If I can make that menu go away, it's really annoying. But you can see that there is this tiny little black region, which is equal to the Uniswap spread. So that's the MIM chart. Would you guys like to do another one? Something a little bit more volatile, maybe?
Yeah. This is something. Yeah, Mark, this is something that we had spoken about, making the spread when we were talking about ST ETH and ETH.
Yeah.
So he's shared this in our live stage calls. And let me
Okay.
see. Has a Google Drive here shared as well. Is that something that we can work with on the call?
Yeah. Where is this being shared?
Scroll down again to below. You'll see carbon. You'll see
Live stage
V2.183.
calls. Got you. Okay. Made some spreads. Yeah, cool. Okay. STETTC, CVX, curve. All right, cool. Let's have a look. Nice. All right, so this is perfect, right? This is already in a CSV format. So what I'm going to do is I'm just going to download this. Put that here. I'm just going to take the. You don't have to do this. This is just my own PTSD from Unix. But I'm taking out the white space in the dashes. Okay, so let's go ahead and do that. So we're going to go back to the GUI, and I'm going to replace that file name, which was the MIM CSV, with this one that we just received from 0xBet. And I'm going to restart and run all of this. Okay, so this is ST ETH versus ETH. Unfortunately, my simulator at the moment still assumes that the numeraire is USD, but not a big issue. So let's think, how we want to do this. So first of all, it's only got 800 data points, so I don't mind taking all of that. Then let's see. So it looks like it basically has an automated range management built into the protocol, like Arrakis. Carbon looks more stable in Unity 3. I'm just going to see. Okay, So I'm trying to read these. I'm trying to read these charts that 0x has provided us, but I can't quite see where he wants the ranges set up. 0x, if you're there and you've got a specific range in mind for both protocols, please feel free to let me know. I can even zoom up a little bit here. But basically, remember that these are in terms of ETH. So we can say that this is like when it's spiking high, this is ST ETH as like 1.009 ETH. And when it's going low, we've got 0.9839 ETH. But if you don't have any suggestions, and am I mistaken, by the way? Like, can you actually see a particular price range, Joe?
Let me see. For where he
Okay,
wants.
yeah. Okay, well, whatever. I can still do this. So let's say,
Yeah, I think you can hear me now. Yeah, I
Yes.
didn't have
yes,
anything too specific in mind. It's like, I don't know, it's like two tokens that on their own are volatile. So then I think it's interesting if you like divide them against
yeah, of
each other. So
course.
you're playing like the spread trade.
Well,
But then they should just basically hover around one if you believe that
right.
Lido ETH should track ETH. So what you have on there looks like pretty reasonable.
Okay, cool. So we'll use that for Uniswap, and then to do something a bit different this time. And this is how I plan to use Carbon, by the way. I'm going to set the buying range to be like somewhere down here, right? So that we can take advantage of these profound drops. And one of the other things that I like about Carbon is that we can set the sell price to be exactly unity, right? So if we want to, we can create an infinitely concentrated curve at exactly one. And this means that you're always buying, the wrapper at a discount, and then you're always selling it at exactly at unity, which is helpful. We're going to miss a little bit of that top action. So let's just go ahead and do something like that. I feel like, right? If I was someone that was, creating a strategy for STE, this is probably what I would do, right? Somewhere between, a 5% drop and a 10% drop is where I'd be happy to buy it. And then I'd be happy to sell it anywhere around one, really. So let's use, are you comfortable with that, 0x?
Yeah, I think some of this is like taking advantage of the benefit of hindsight because like nobody was expecting that like
Yeah, sure.
descent depeg to happen ahead of time. But both are interesting, like doing it that way
Well,
or
I mean, if you object, I'm happy to set these levels wherever you want. You're right; it is taking advantage of hindsight. But where would you like me to set them?
so I think if before that depeg happened, people would have probably been playing the range more like 98 cents and higher, like I don't know, 98 to 99. And I think
Sure,
that depeg like surprised a lot of people.
got you.
I think that's one
So
question I have is I think you mentioned Carbon should be able to handle wild swings better than UniP3. So I think this is maybe
right,
an example of that. Um,
yeah, absolutely. Okay, so what about like this range, right? And maybe I'm still giving myself a little bit too much advantage here. But what about like that, right? Because compared to Uniswap, right, we started at 1.0086 and down to like 97.93. And so this one, we've got pretty much that same range. We're just giving ourselves a little bit of a gap in the middle. But even so, right, if you want me to close that gap, I can. What would you prefer?
yeah, no, I think that looks fine. Yeah, as long as like the bottom end isn't too low and it's like at around 98 now.
Cool. All right, let's do that. So this is we're selling between about one. Actually, we should probably move that up a little bit. We're selling down close to one up to about 1.01, so about a 1% increase. And we are buying down to like 98. So these are fairly similar situations. Let's go ahead and do that. And because of where the market price currently is, we're forced to, we can't do much about our TKN component, which in this case is going to be the STE. And I'm going to say that we start our position because it's saying that we did it all the way back here. We're going to start it sort of like halfway through, I think, just so we can sort of show off that this is able to do this. Now here, it's actually not going to matter what I do because we're out of the money on the TKN side. It's going to force it to be 100% USDC for the simulation's sake anyway. So I'm just going to go ahead and set that up here. Let's do the 10,000. And the protocol fee, again, somewhere around 30 basis points, I think is good. Let's do all three. We will animate it. And again, you'll see that we've created this pickle file, which is the carbon time series STE pickle. So let's take that and run that through the simulator. So again, we just replace this file name and hit go.
Now, Mark, we're talking about a very, very tight range here. Is this something that would be practical with Carbon being on chain or not so much?
It's actually, in a way, I mean, it depends on what you mean by practical. Can you elaborate for me?
Well, naturally, I always go back to gas costs and things like that. And when you're trading such a small amount in a percentage basis, it just seems like that I'm not sure it'd be productive, but maybe that's where my bias against Ethereum's gas fees in a traditional trading environment.
Right. No, it's actually, in a way, it's even more practical. Because, as you pointed out, because the gas fees on Ethereum can be relatively high. It means that these like tiny differences in the buying and selling price of your asset can basically be almost nothing compared to the gas cost of operating on the chain overall. And so you can actually set your buy and sell ranges to be relatively gratuitous, and traders will still take it because compared to the price of the gas, the spread that you've set is almost nothing. And this is where being able to set your spread dynamically is actually an interesting, has interesting opportunities. Because if you take into account the gas adjusted price of things, you've actually you don't have to have a razor thin margin, and expect that people are are going to be run off by a much wider margin than that. It's just not true. Obviously, for things like stablecoins and things like that, you're going to have a huge amount of competition, and so you probably won't get routed through very frequently. But you also don't need to get routed through very frequently. One of the things that I think I've said in previous DAO discussions is that to be profitable on Carbon, you only need to someone to trade with you once or twice, right? You need to get hit. You basically are waiting to get your limit order hit on the downside and then hit on the upside, and that's it. So you don't necessarily need to have this oscillating pattern in order to be successful. But obviously, it's better that way because you get to compound over time. But the short answer is it's fine, right? If you want to set a very, very narrow range, go ahead and set a very narrow range. It's not affected by the gas costs of the chain. In a way, you can, because you can basically set up your sell range, and then as I've done here, you can choose your position inside of it, and then that will adjust as the thing as your strategy progresses over time. But with respect to having discrete bands, the answer is no. Except that there's nothing stopping you from just creating multiple different strategies, right? It's fairly it's a fairly inexpensive protocol to run, because we're only it's only 3 slots in memory sort of thing. So compared to interacting with other concentrated liquidity protocols, I actually expect this to be priced in terms of gas very competitively. And so setting up 2 positions or 3 positions or something like that is absolutely reasonable, and certainly it's something that I will be doing. Yeah, exactly. And the way that we've set up the formulas means that it's not bounded by tick numbers or anything else, which is means that you have a lot more resolution than you would typically. Yeah, exactly. So yeah, and yeah, it's not like a big problem. Like I don't want anyone to think that I'm being like super critical of the way they set up that protocol, right? They've done it in a very specific way for a very specific reason, and it's aggregation, right? The whole point of Uniswap v3 and the way that it's organized is that you basically pool your money with everyone else, but into specific buckets, and each bucket serves like its own little liquidity pool. And then as a trader trades, if they trade through that tick range, they have to instantiate or initialize the next tick range, and then if they trade through that, they have to initialize the next one, and so on. And in Carbon, we kind of just take that concept and we kind of break it down even farther by saying that each liquidity provider can just be their own liquidity pool, and they don't need to pool it with anyone else. And the routing, even though our front end is actually very, very good at matching things and performing we have invented an algorithm that's able to route through any number of these different liquidity positions with perfect precision. We don't necessarily need to rely on front end because we have trade aggregators like 1inch and Matcher and so on that we'll be integrating with that will know how to do that anyway. And so when they find a trade route that involves Carbon, they will just take it. It doesn't matter that these positions are aggregated together or not, so long as you're providing sufficient liquidity to attract those kinds of trades for the gas cost. So there is this small caveat that I think Carbon does, it does lean on the side of people that take trading seriously and are putting down, something like, something like 4 or 5 figures when they're creating a position. So these small sort of $100 limit orders and things are probably unlikely to be fulfilled with regularity. Right, I would say this is a small concession to make for targeting the demographics that we're actually hoping to service here. Okay, so right now it looks like we've completed the simulation, and I'm going to show you a little bit more data as well. Here we are. So we've completed all of the PNGs, and now we've got our GIFs. And this should be right underneath. Yeah, here it is. Okay, so let's have a look at V2 first, because it's generally a good one to choose. So you can see here, right, this is that same price chart that we were looking at, evolving over time. Performance versus HODL, constant product AMM is actually not too bad. And yeah, I guess this is kind of a good base value from which we can compare the other results. So let's have a look at Uniswap v3. Okay. Honestly, this is exactly what Uniswap v3 lives for, right? Constantly crossing these ranges and generating this, basically chasing this spread around all the time. And so you can see here the LP, or this particular position on ETH versus staked ETH, would have attained something like, okay, that seems to be approaching sort of 14%, I think. So this would have been like super profitable on Uniswap v3. Might even be like, yeah, okay, so it's actually like it's flirting with a 15% return based on the strategy that we provided it with. I'm just going to let this play out so that we can see exactly how good it gets. You can see, yeah, okay, here as it's like winding down, we're kind of, okay, so as it dropped out there, we ended up taking a bit of a hit, but not too bad. And came back up. Yeah, okay. So yeah, okay, it touched on 15% return, I think, and this should end pretty soon, I think. Yeah, okay, so it got to about 15%, which is pretty good. Let's try the carbon strategy that we set up and see how it does. Okay, so over that initial period, carbon's actually it got up to 14% very quickly. So these these oscillations here, this is exact, like, I said that's great for Uniswap. It's even better for carbon, right? The more crosses you get, because the spread adjusts, means that you can basically you can wait for the market to come to you. And so on carbon, for that same period, we're already up to like 21%, I think. And yeah, so I'm not sure what's going to happen here because the market hasn't quite caught up to us yet. But yeah, I mean, you can see, it's fairly performant for these kinds of assets that are supposed to be pegged with each other. We're coming down a little bit here. As, we saw the same activity on the Uniswap V3 position. So this seemed to have peaked low at about 15%, I think. And if this starts to go up again, we should see a slightly more performant profile because now we get to sell all of these. Yeah, okay, there we are. Cool. So yeah, I'm actually happy with that result. 0x, you want me to share these GIFs with you, by the way?
Mark, out of curiosity, 0x, go ahead.
I was just going to say, yeah, they're super interesting. Tells an interesting story about Steve too. Could be good to tweet about.
Cool. I'm going to show you something else as well.
Mark, really fast, where did carbon end up on that? You know how you can go to the last PNG, how you showed me you can go to the last PNG to see what the final result was?
Yeah, sure, let's do that.
I mean, it was
out of curiosity, just because it happened so quickly. What was it? I know it was like 0, 15, 23, 24.
So that's Uniswap V2. Uniswap V2, Uniswap, so carbon will be.
So this brings up something I don't think that we had discussed yet. You can look at the GIFs and you can watch the animations, but you can also go through your PNGs. And the last, the highest number is going to be the last, the final result, right?
Yeah, so it basically, so carbon on 25. This, on this particular strategy, flirted with 25, the same way that Uniswap was flirting with 15. But, in a way, this is, carbon got a huge head start from this volatility at the front, right? You saw that, it basically plateaus out a lot sooner. So, carbon being the buy low, sell high protocol, if you have more opportunities to buy low and sell high, then you're going to do better. Whereas with Uniswap V3, it really is a market making protocol, right? It's trying to keep the spread constant, sure, but it's also, it's trying to make a market wherever that market happens to be, and you're trying to guess, where that market's going to be. So I'd say in this particular case, because of that strong volatility that we had, not just at the beginning, but also halfway through and also towards the end here, that gave carbon, a very significant boost. And if we corrected it for volume, although STETH didn't get a lot of volume, Uniswap V3 might have done a little bit better. But I think in this particular case, this is a really excellent demonstration of how these pegged assets can perform really well on carbon if they've got that volatility. Whereas with things like USDC versus USDT, actually in those cases, Uniswap V3 is probably better because it manages to keep a low spread, and that spread is expected to maintain, to stay consistent over time, right? People aren't going to tolerate a huge amount of slippage on a stablecoin trade the same way they do on some of these other stake derivatives, and I expect that to remain true almost forever. But okay, before we go on, I did want to show. Can you please repeat that? Yes, correct. Absolutely. It's whatever the simulator starts with. And I can show. I'm trying to show you that right now. I'm just going to find the log file. Give me 1 second. Here they are.
Well,
So when the simulator runs, zoom up here. It produces this file that will have the same name as the start conditions pickle file that you fed the simulator, but it'll end with _log.txt. And what's really great about this is that it gives you a human readable analysis of exactly what the simulator did at every single point during the analysis. So you can see like these are very, very long files, right? If we've got 1,000 data points in terms of price, we're going to have 3,000 explanations for what was done here. But just quickly looking at it, I'm just going to jump to a random part of the simulator so we can see what it is. So here it's telling you that it's analyzing Uniswap v2. It tells you that the marginal price on Uniswap is 0.987781 USDC per TKN. So here you have to remember that I haven't yet modified this to take into account other numerals. So this is actually ETH per wrapped staked ETH in this case. And it's telling you what you can buy wrapped staked ETH for as well. So you can currently sell it for 98 cents and change, and if you want to buy it, you have to buy it for 99. It's telling you what the market price is, and then it's telling you that it's going to calculate the effective arbitrage trade that should occur to bring this protocol in line with the market price. For Uniswap v2, though, you have to do this a certain number of times because it's actually impossible to arbitrage or to perfectly arbitrage a constant product protocol in one trade. And remember, the simulator is ignoring gas. So it's telling you after 10 iterations, 1.85 wrapped staked ETH was sold for 1.82 ETH. And then the marginal price goes on Uniswap v2 after that should be such that it matches exactly what the market price is in whatever direction it happened to drag the spread. And then after that analysis is done and after that trade is completed, it will then give you a complete summary of the current state of that Uniswap v2 position. So here it's showing you that it's got 5,005 wrapped stake ETH. It's showing you that it's got 4,955 ETH. It's telling you exactly how many fees it's earned in both of those token balances up to this point in the simulation. It tells you the market price of wrapped stake ETH in this case, the current portfolio value, the current HODL value if the liquidity provider had chosen to do nothing, and then a percentage gain versus the HODL thing. And then it will do the same thing for Uniswap v3, right? Shows you the prices, explains what the arbitrageur has to do, shows you what the prices are after the arbitrage, and then gives you an update on what the Uniswap v3 summary looks like, and then it does the same for Carbon, right? And so you can actually step through the simulation if you wanted to, and actually prove to yourself that these calculations each make sense in and of themselves. What would a hyper efficient market motivated to balance these protocols versus each other do during these moments in time? And so the reason why this log file is produced is partly to take away some of that black boxness of what's happening, because I fully appreciate that even though the code is there and anyone who can read Python can interrogate what's done and determine whether or not they agree with it, but this readout means that you don't actually need to be fluent in programming languages to sort of understand what the simulator is doing and whether or not you agree with its conclusions. So that's why I've done that. And that's the other thing that I wanted to show you. So you get all of these PNGs, right? There are hundreds of them. I recommend deleting them after you've got your GIF. You get your GIFs, and you also get this log file, which is I think helpful if you have to write about it, right? So the reason I included that was specifically to help people will write blogs or tweet threads or whatever. But I think that as a collection, right, it's an extremely powerful. It's an extremely empowering data set from which to learn not just about Carbon, but also about these other protocols. Like I see it as being a general purpose thing. It's not, you can use it if you want to investigate how to be a better liquidity provider on Uniswap v3, right? It will also help you do that. And I fully expect people to use it for that purpose.
Mark, I want to circle back to something that you said earlier. You said that concentrated liquidity is contingent upon the fees that you earn. We didn't get into the fact that Carbon's not. So with that last, like I'm going to use the last example for this, where constant product was like 0.15, concentrated liquidity was 15% more or less. That's including the fees that a trader or liquidity provider is earning in that performance versus model. In Carbon, it's not. That's completely separate. So that 25% is protocol. That those fees are going to the protocol. That's strictly performance based.
Yeah, correct. So and I'm glad that you brought that up. So in the simulator, it knows how to evaluate each protocol independently, right? There's not just like one central function that evaluates each one of these protocols together. Each protocol has their own sets of functions to evaluate them. And what's important here, right, is on the asymmetric concentrated liquidity for Carbon, it knows that these fee earnings cannot be included with the performance metric for this trader, right, for this liquidity provider. And so it is important to note that, right, that despite the protocol actually earning fees alongside the liquidity provider, and that these fees are omitted from the performance tracking, in this particular case, this LP actually still did better than in the Uniswap v3 case, where these fees are included in the performance versus HODL, right? So that's not a trivial difference. And this also, by the way, is one of the reasons why when we have a look at Uniswap v3's performance on stablecoin pairs where you don't have the same volatility versus Carbon, that Uniswap tends to actually come out ahead, and it's because the protocol fee earnings on the Uniswap side go entirely to the liquidity provider and nothing goes back to the protocol. Whereas on Carbon, the fee earnings component is exclusively the property of the protocol and will be used for things like buying and burning BNT if that's what the DAO decides. But yeah, it is an important point. You're right to bring it up that Carbon actually has a protocol revenue component, and despite that component, it's often true that the liquidity on Carbon is still better off than if they were on these other two protocols. Not always, but oftentimes that's true.
Another quick question from Xerox Bear. Does the simulation assume those arbitrage trades actually occur? Is that where intraday volatility comes from?
Yeah, exactly right. And so this is why I said, and maybe we can do that. So for example, if we take let's go ahead and open up one of these things. But yeah, the simulator, it only cares about where the market price is and what trade should be performed in order to make the price on each protocol that value. And so it doesn't care about how long it takes, and it doesn't care about it basically only cares about what the price quote should be. So one of the ways that can hurt the simulator with respect to how it does for Uniswap v3 is that in general, if the price of MIM makes a move from 0.99 to I don't know, 1.06 or something, that doesn't generally happen in a perfectly straight line. It's actually, having looked at this, it's actually a lot smoother than you might expect, but it's not perfectly smooth. And so one of the ways that we can, and if I zoom up here, so one of the ways that we can sort of give a better representation of what things look like is if we're taking a CSV from CoinGecko, is to take this column and split it out into something that looks like a Hakanashi, a Hakanashi candle. So instead of having just the price column, we're going to have the open, we're going to have the close, and we're going to have the high and low. And so one of the ways that I do this is I'll set something over here that I just call volatility, and we're just going to set that to 100. I'll show you what that looks like in a second. So what you can do is you basically say, okay, the high price is going to be the open price plus some amount, right? So if we take this, what we can do is add some random amount, and we're going to say between 0 and 100 times that open amount divided by what we're going to call the volatility number. And that's not going to change at all, so I'm just going to put dollar signs around this. And so in this case, this is quite extreme, right? So here we've got something that where the high price, so the top wick of this candle can be at maximum 2x, right? The current price. And that's not going to happen very often, but look here, it actually happened. And so we know that this is extremely unlikely. But if we wanted to simulate a stupid amount of volume on Uniswap V3, this will actually give it to you so long as we are inside of the price bounds of the simulation. And if we want to make this slightly more reasonable, we can change this volatility number. So if we, paradoxically, if we set this to a higher number, that means that this delta is going to be divided by, is being divided by a slightly higher number. And so this is now, instead of a 2x, this is now a maximum of 10%. And if we set this to 10,000, then this is now a maximum of 1%. And I think in general, this is where I'm sort of getting good data. Something like a 1 to 2% volatility between the top and the open is actually pretty reasonable. Let's go ahead and set that to 1%. And then I usually just drag this down to the rest of the row. And then to do the low price, what I'll do is basically the same thing, except instead of it being plus some delta, I'm going to set it to minus some delta. And again, this is going to be, plus or minus 1%, which means that if we just take the high price here and subtract the low price, you can kind of see that we're getting about a 1 cent fluctuation for whatever this time frame happens to be. And you can do this as many times as you want, right? Because the point is the simulator doesn't really care how many data points you have, and it doesn't care that these time intervals are continuous. And so this is one of the things that I mentioned in an earlier call, which is that if you want, you could say that that this is a 1 minute candle, and then this is a 1 hour candle, or this is a 1 day candle. And as long as you're getting results that are useful, right, that actually reflect what would have happened during that time period, remembering that what you're actually doing is choosing a trade and a trade amount based on where the market price will end up. So if you want to simulate, for example, 10 trades per block, that's fine. But you need to simulate what the data that you feed the simulator isn't to trade a certain number of times or a certain amount of money, but to move the price quote on that protocol a certain number of times to a certain destination. So it does everything by the target price, the target marginal price, not by the trade amount, which is actually the most sensible way to do it. And then for the close, I usually just do an average of high and low. Okay, and now what we've done is we've generated 4x more data. And we've also got this volatility now that would actually help Uniswap V3 generate more fees in the simulation. And my goal, by the way, is eventually to have, rather than just set this number randomly or based on what I think themes right, or what tends to give good results that match closely with historical data from Uniswap v3. Eventually, what I want to do is to have this high and low and close be a function of the total volume. And so this is something that I'm actually working on right now, so that we can guarantee that, for whatever this period of the simulation is going to be, that you get a certain amount of trade volume through Uniswap v3 that's commensurate with this number. And then when you move to a different row, you get a volume that's commensurate with this number, and so on. And this would actually give you a very, very good basis for comparing these protocols on. But it should be noted that Carbon doesn't really care about this. So this is only something that I have to do to investigate Uniswap v3's performance better than we already are. And also to make sure that when we're comparing these protocols that we're doing so in a really fair way. It doesn't affect Uniswap v2 as much, but that's still an important consideration. But just remember, it doesn't affect Carbon at all. So if you are, if you are interested in just looking at Carbon standalone, not necessarily compared to the other protocols, then you don't really need to worry about that. But you can still do this if you want to. Just know that if you, if you are doing this, you need to call these columns open, high, low, and close in any order, and you can do it in any case. So if you want to, you can call this, I don't know, low or caps. You can call this open, but just the N is a cap. Here you can do just G and H as caps. Close can be just the L as a cap. Whatever, right? The simulator is quite happy to read all of these. So let's go ahead and save this. I'm going to save this as mimUSD max mod modified. Okay. And where did it save that? Give me 1 second. Yeah, it should be there.
Did you pull up me and save it in your downloads? Oh, there it is.
Oh, no, there it is. It's a new Windows 11 feature. Things don't show up immediately. Okay, so again, we're just going to take that file name and get to work. So I'm going to restart and rerun all of these cells. Oops. Okay, so there's the file name. That's when I should have rerun it before.
Something else we didn't say, Mark, is it's important to keep those quotation marks in the parentheses. So when you're copying and pasting, make sure that it's in those too.
Yeah, that's true. Okay, and so you can see now, like this was the same mim chart that we had before, but now look at it, right? We've got all of this extra stuff, right? And it's no longer like 800 data points. It's now like more than 2,000. It's like 2,400. And we've got all of this like additional volatility now that's going to make that Uniswap v3 position just so much more performant under simulation, because it's going to get these, these huge, these huge changes that makes Uniswap such a great protocol for these kinds of trading opportunities. And so let's go ahead and do this, but make it like in such a way that both Uniswap and Carbon are like getting their best possible labs. You know what I mean? So I'm going to take this whole, actually, maybe if, I'm trying to imagine what someone who's like critical of the simulator would say. And I think that they would say probably that it would be more profitable to like concentrate the liquidity to get, I don't know, like 85% of these wicks in there. But you can see we're still, we're going down only by not even, about 1.3 cents to the downside, and only, 7 or 8 basis points to the upside. So this is still pretty concentrated. Okay, and then for Carbon, let's just leave it, right? I think that there's like, that's quite a lot of crosses happening there anyway. So I'm just going to leave that exactly as it is, and so we're going to be able to do a perfect heads-up comparison. You can see that it's warning us that the market price is starting sort of just slightly out of range. There's not much we can do about that, so let's just hit OK. For the TKN weight, USDC weight, let's just do 1 and 1. Be reminded here that TKN is MIM in this case. For the portfolio value, again, I just do 10,000 every time. And protocol fees, 20 bips. Let's just do Carbon and Uniswap V3 this time so we can get through it a little bit faster. Okay, so remember, after you've done that process, what you're looking for is a pickle file that starts with start conditions. And so here's the start conditions, MIM, USD max modified pickle. So we're going to take that one and we put that directly into our simulator right there. And then we run all of these cells. Good. Okay. And then when the little star appears, we know that it's working. And yeah, here we are. Right. So this should take a couple of minutes. So Jen, if there's anything you want to discuss, now's a good time because we're going to be waiting for a minute or two while we generate all of these files.
The only other thing that I wanted to point out was when we were funding Carbon, we were saying 1-to-1 or 2-to-1. You don't necessarily have to fund both sides on Carbon.
Yeah, correct. So now that I can do whatever I want here now. So Carbon can be like a true single-sided liquidity protocol if you want it to be. So even though we've got these ranges set up, right, the way that we had, if you want to, you can decide that, you know what, I'm not going to fund any USDC, I'm just providing MIM, right? Or, the other way around. You can provide just USDC and no MIM. It's important to realize, though, that, yeah.
Go ahead. I was talking about where you put your Carbon weights, right? Like your TKN weight and your USDC weight.
Oh, yeah. I mean, yeah. So that's true as well. So there's multiple ways that you can do it. So we can do it up here, which is determining the price range that you set. But you can also do it down here. And so if we set the USDC weight to 0, for example, then what we're saying is of this $10,000, we want everything to be in MIM. And then the opposite would be if we set that to 0 and we set that to 1, then now what we're saying is we want this $10,000 to be exclusively denominated in USDC. And any combination thereof, right? We can set this to 2-to-1, and this means that we've got about 6,600 in MIM and about 3,300 in USDC, and change. Any number that you put here. It doesn't have to be an integer either. If you're doing something, remarkably precise, and I'm not sure why you would, but you can. You can put decimals in here, and it will respect whatever this ratio is, but just be aware that it is a ratio. These aren't specific percentages or anything like that. Although you can do it that way if you wanted to. So, for example, 2080 would be 20% in TKN and 80% USDC and so forth. But yeah, if you wanted to simulate single-sided, you can just set one of these numbers to 0 and then this other number to whatever you want.
Yeah, I think that's the only other thing that I wanted to add that I noticed while we were going through the different examples. 0x, are you still up here on the stage? Do you have any questions since we are kind of running your simulations and your requests here? I'm curious to hear from you.
The other thought I had is that we've looked at a bunch of examples that maybe happen to line up well with both UniV3 and Carbon because they're very tight ranges, mean reverting, and the level doesn't move. Would both or either suffer the same downsides if you looked at a much more volatile chart, like just ETH or Bitcoin or whatever?
Let's do that.
That's where you have to start adjusting your ranges to stay in range.
Yeah, we can do that next. In fact, we can probably get that started because I do have. I did have Okay, let me just copy over.
Are you looking for an example for what?
I just
Something other than
so
like the tight ranges and.
yeah, the point he's making is like we could have, in a way, we could be cherry picking for like both protocols here. You've got these changes that that move mostly, essentially mostly sideways. So we should choose something like the ETH chart, which I think is
I sent
an
you that
excellent suggestion.
CSV.
I've actually got it right here. So I've got the. So let me just move that over. Okay, so I'm just pulling up the Ethereum chart here. But I think we actually just completed our simulation. So let's have a look at what the results are first, and then we'll do the Ethereum chart. Okay, so let's get those GIFs. There we go. Okay, so let's do the modified Uniswap v3. Okay, so this is the one that's got a lot more volatility. So we've taken the price data that we had, and we added 3 more columns. And so now it's each step of the simulation, right, is essentially looking at the open price. Then it's going variably to either the high price or the low price, and then going to the close price, which we've defined as being the average between the high and the low, just for convenience. And so you can see here, like, when you've got this kind of operation, Uniswap v3 does pretty well, right? And so here it's basically fees accumulating in linear space, which is an exaggerated version of what you would expect of Uniswap v2, which is I guess isn't surprising. But this just goes to show you how important it is to make sure that you do account for that intra-range volatility when you are evaluating Uniswap v3, because it is the lifeblood of that protocol. So if you don't account for it, you're not really performing a sensible analysis. You're just kind of you're not really doing anything valuable. But having said that, it's still worthwhile animating whatever it is you're animating to show how the liquidity moves and how fees accumulate and that kind of thing. So let's go ahead and have a look at how Carbon did on that same one. Okay, this is Carbon under exactly the same conditions, right? Remember, we didn't actually move anything in this instance. I can't remember where Uniswap v3 finished, but I'm just going to call up that.
17.5%.
Oh, good job.
Thank you.
And let's see where Carbon's going. Yeah, so you can see, this is one of the things that is, that benefits Uniswap v3 when you don't have a lot of actual volatility. Is that because it sets the margin, to always be, like for example, 30 basis points from the market, then it can actually accumulate fees even when there's not much going on. And so when I improved that volatility, it affected Uniswap v3 in a profound way. But for Carbon, because it's not volume dependent, it doesn't really care. All it cares is like where are the high prices and where are the low prices. And so that additional price data that we injected, it's not necessarily, it doesn't affect the Carbon simulation that much. So I think in that case, we saw Carbon go to
14%.
Yeah, 14. Right. So it still benefited a little bit, but it benefited Uniswap v3 a lot. And so that's why we need to be careful about adjusting for volatility when we compare these protocols up against each other, and that we can't make super broad statements about the relative performance of these two protocols. We can still make specific claims, which is when there is a big volatile shift that just affects the price. Carbon is likely to perform a lot better under those conditions. But for things like this particular peg, we can see pretty clearly that even though Carbon is still performing admirably, especially compared to to other constant product liquidity pools, for example, Uniswap v3 is really specifically tailored to benefit from this type of activity. So it's not surprising that in a lot of these stablecoin pairs, it actually does come out ahead. Okay, so let's do the other one, which was the Ethereum. So you can see, and actually when I finally make this public from my GitHub, I'm going to have this done with Ethereum as like the base CSV that you can, where it assumes you're going to start. So let's paste that in there and run everything again. So this being just a reminder to everyone, right, that you always start with the GUI. And so this is the historical price data for Ethereum. I'm sure we all remember when it peaked at very close to $5,000. And we have what looks to be about, slightly over 2,500 data points here. And so I think what 0x was asking is, like, what can we do to sort of to simulate a bad situation, right? Like, what would be a if something's in like a strong downtrend or a strong uptrend, how do these protocols perform against each other? And so 0x, if you're still on the line, do you want to tell me sort of like where you would what you would like me to do?
Yeah, so I think I'm kind of at a loss of how to trade a chart like this with fixed price ranges. Like my thought would be I'd want to play like a moving range, something like a Bollinger Band.
Yeah, that's actually, I'm really glad that you brought that up because it kind of validates something else I've been working on for a little bit, which is that having these horizontal bands is not perfect for all market conditions, especially if you're going to set up something for a long period of time. It's important to have these ranges sort of slant in some direction. So yeah, it's a very important observation, and so I don't want to to dismiss it. And unfortunately, with the protocol as it exists right now, we can really only trade high and low on a flat scale. But I think maybe we can at least agree that with a situation like this one, that I suppose a Uniswap liquidity provider would probably think that something like that mightn't be too bad. Like they didn't call be aware this is a logarithmic scale, so this is they're going to have catastrophic IL when the price goes up to here. But would you at least agree that like something like this, someone would be like not necessarily disappointed with, like they kind of captured, this kind of sideways component of whatever it is that they were trading. Like, would you be satisfied with this?
Yeah, exactly.
Yeah.
A lot of people would have missed that top if you'd like set that range, like 2 years ago.
Yeah, exactly right. And so, like, if we set this up, like, would you like? Do you want me to move this, or are you happy if I move on with this setting?
No, I think that's fine.
Perfect. And then for Carbon, we can set it up either the same way, or if you like, I can move things around. Would you like me to keep it the same?
I think the same makes sense. Like I don't have much more intuition how to guide it. I think one question I have is, so here the upper and lower bounds look they're about the same. Does Carbon force like an empty range in the middle where it takes no position or it's neutral or something like that? It looked like it was doing that in the animation.
Yeah, it does. So the best way you can think about it is that these 4 different price levels, the topmost and the bottommost, these are your buy and sell ranges, and each one is represented on a separate curve. And so so here I can show you when we actually move into this next part. The simulation isn't going to let us start with any USDC here because it would get immediately arbitrage. But essentially, when the price is moving up through this red range, that's showing us that it's going to be selling ETH right at that position all the time. And so when it moves out, right, it's now run out of ETH. But as we're selling ETH, this green band will start to fill up, right? And that's the USDC that the ETH is being sold for that's being added to this range. The thing that makes Carbon different to other concentrated liquidity protocols is that it will only fill up to wherever we set that middle slider to. So, if we set it down here, it would only fill up to that level. And you're right that it will forbid one of these going above the other, right? You can get a weird type of behavior that if you're not entirely familiar with how carbon works, if you set an overlapping range, you can actually get exploited. And so that's forbidden from the launch of the protocol. But there is a way to do it. And actually, Stefan, our chief economist, is going to demonstrate this, I think, on a Twitter thread relatively soon, that you can actually use carbon to completely recreate Uniswap v3. So you can actually have the red and the green completely overlap with each other, and then they will actually chase each other in perpetuity, the same way that Uniswap v3 does. So you can technically do it. It's just that for a brand new protocol that's kind of unfamiliar to the industry, it might be dangerous to let people play with that overlap because it can set up a vicious arbitrage cycle that can financially harm the liquidity provider, and we're trying to avoid that at least until people have kind of got their legs under them. We've got a stronger culture of how to use the protocol under us.
When the animation runs, it looks like there's kind of like an uncolored portion for carbon, but I guess it's not the right way to think about it. That like you're not making money in that range, you're actually still benefiting.
Yeah, exactly. Yeah, because you have to remember, like sometimes not selling the thing, right, is more profitable than selling it. And that's the key difference, right? Carbon waits until it reaches that price boundary that you decided to sell. Whereas on Uniswap v3, it will sell at any price inside the range that you chose. And it will buy at any price inside the range that you chose. And so this is the thing that gives Carbon that limit order-like functionality. Whereas traditional concentrated liquidity protocols don't, like, they only have a limit order function if you're fast enough. Whereas on Carbon, it because each curve only trades in one direction, it's actually a true limit order. It only becomes a part of an ongoing strategy if the price happens to re-enter your buy range, which in a lot of the simulations we're doing here, it makes it look kind of like that happens all the time. But note here that the bottom of this buy range is like 996. And the top of this buy range is like the top of this sell range is like 2032. So even though in crypto, of course, this can happen in a single day, and this particular candle looks like it actually did happen in a single day, but in general, you can imagine you using this to play out over much longer time periods. So decide to buy something after it capitulates more than 50% or between 50% and 90% capitulation. And then sell it again after it 2x's, 3x's, 5x's, or whatever. So it's a completely different sort of thing. So you're right to observe that when the price is moving around inside that black region, the protocol isn't performing any trades. But sometimes not performing a trade is more profitable than performing one, and that's the niche, right? That's the difference. That's the agency and control that you have in a protocol like Carbon that you don't have on a protocol like Uniswap v3.
It's fundamentally different because Uniswap and basically every other AMM makes no money off price movement, but makes 100% of its money on just being in every trade. So you have to chase the range, and you want to capture every single trade that happens. You want to be in range, but that's fundamentally different here, where you're not fee revenue is not your main profit source, and it's actually the price changes that you care about. Sometimes you want to sit out on a trade, which is
exactly
never the case on Uniswap.
Yeah, exactly right. It's not about how much volume goes through the protocol. It's about how profitable those trades are, right? And rather than the protocol deciding, the user decides. They choose when when what their price targets are and how they want to trade stuff. So yeah, it's a completely different paradigm. You've done very well to observe that. Okay, so here's our new starting conditions for that one. And let's go ahead and put that in the simulator and see what we get. There we go. And in the meantime, maybe we can have a look at, what was the last one we just ran? Last one we just ran was the
Modified.
modified. Okay, so let's have a look there. Yeah, and so just to remind everyone, right, this log is like super valuable. So this is one we did when we were just analyzing Carbon and Uniswap v3. And here, right, where you can actually see it reporting exactly what I was just talking about with 0x, right? You can see that it's telling you that the marginal price quotes in Carbon are, right? You can buy MIM for 0.99 USDC, or you can sell MIM for 0.999 USDC. And then it tells you that the market price of MIM is 0.994. And if you have a look at these two numbers, what you can see is that market price is right between them. And it tells you that, right? The market price is within the spread on Carbon, therefore the arbitrage has nothing to do. Since Carbon is already at equilibrium with the market, no trades were performed. And then it completes the analysis. And you should expect that, right? When you're doing these analyses, this is, I would say, like half of the course in Carbon, because it waits, it's patient and will only execute that trade after it's reached that particular price threshold. It doesn't care that the price is moving. It will quite happily let your portfolio increase in value because the price of the TKN is going up, and then sell it only when you've nominated it. Whereas in Uniswap v3, you'll find that that's almost never the case, right? Essentially, every time the price moves, it necessitates a trade on the Uniswap v3 protocol in order to bring that protocol into equilibrium. So you can see that happening again. Okay, here, so actually, here we actually did get a trade on Carbon. We get another trade on Uniswap. And then here again, Carbon, it says that after the market price moved from 4.9s to 997, that is within the spread on Carbon, so nothing happens. But on Uniswap v3, that tiny change, okay, in this case, for Uniswap v3, it's also within the spread. And this comes back to something that we said on our Twitter Spaces recently. That again, I still feel I need to say this again and again. Uniswap v3 has a spread. You can't just use the marginal price the way that it's reported. You need to adjust for the fee, and that means that there is always a slight difference between the price that you can sell something and buy something from the same liquidity pool there. And the simulator knows that. And so when the market price is between those two numbers, as it is here, just as it did for Carbon, it will tell you that there is no trade performed. And so coming back to the theory of the simulator, I will elaborate on this in much more detail when I write a Medium article on it. But what we're doing here is we're choosing a price and then letting the price determine the trade size and the trade volume, not the other way around. And so in order to get more volume, all you need to do is choose more prices that are farther apart, and that will give more volume to the protocol because it means that more trades will need to be performed. But it doesn't change the frequency because the simulation is essentially time independent, right? There is no consistency between how much time has passed between these updates to the price. So when you see a timestamp move from 4 to 5, you have no idea if this timestamp moving is 1 minute or 1 hour or 1 microsecond, or even just the next trade inside the same block, right? So it can even be 0 time. And I just want to make that perfectly clear that we're not necessarily trying to perfectly capture that time dependence of a normal price chart. We're actually doing something a little more helpful, right, in terms of understanding how these protocols operate. Okay, let's see where we're up to. Okay, that seems to have finished, I think. All right, so this is our, we now go looking for our ETH chart. Ethereum, okay, so let's check the Uniswap one. Okay, so you can see that exact behavior I was talking about before. As the price moves up through this range, it is, it's earning fees, quite decent fees. But notice as well, okay, let it start again. Notice as well that when it's moving up through this range, because the price of ETH is moving, the performance versus HODL is actually going down, right? And this is one of the things that I noticed when I wrote the this research report that we did on Uniswap V3 and permanent loss a couple of years ago, is that people usually just see these fees, right? They see these bars going up, and it means that they sort of become blind to this downtrend of their portfolio value overall. But of course, this is going to reverse itself when the price of ETH starts to drop again. But it does mean that through this range, and this is quite a wide range, right? This is $1,000 to $2,000. But it does mean through this range, because they were selling their ETH off all the way up, they would have, they would have done less bad, I think is the best way I can say it, if they had moved their, their liquidity closer to the top of this. But that also means that they wouldn't have had all of the fees from this wiggling, right, from this roughness of the price on the way up. And so this is kind of the battle when you're using a concentrated liquidity protocol, is that you want to capture, that roughness, but at the same time, if that roughness has very wide boundaries, as it does with things like ETH and Wrap Bitcoin and Link and BNT and so on, you need to set a pretty high spread. Now, a pretty high range, a pretty wide range. Now, 2x is very, very, very wide, and I know that after people see this video, they're probably going to complain that wasn't particularly fair. Maybe I should have brought this up around about to here. But be reminded, if you want to run that simulation, I'm giving you this software to do that, so you don't have to wait for me to do it for you. But I think we saw it. Jen, did you see where this maxed out?
I did.
It was about
it went down to like 70, but then it ended at break even, which is just brutal, because if you withdraw your liquidity at the wrong time, I mean, anywhere from 0 to negative 70%.
Yeah, remember this is versus HODL as well. So if we just gave this a US dollar value, you might even come to a different conclusion, and that's probably a chart that I should add. But it is nice to see, right, that you can, like, this performance versus HODL chart is nearly like a perfect inverse of the actual price chart, which is something that that people generally haven't, or have learned the hard way, I should say. So let's check Carbon. So remember, we chose exactly the same range, but it split the liquidity between buy and sell. So you can see already, like, it's not doing too badly. Sorry, it's because it's such a long GIF, it has to reload. You can see already in that first little, thrust, right? Carbon's already like up to, it peaked at about 15% up here. Now, because Carbon, it has the same folly as other concentrated liquidity protocols. Of course, you would have done better holding ETH rather than selling it. But as 0x, has already pointed out, a lot of people would have missed this top, right? And so selling it back here at like 2K is not necessarily obscene. So yeah, maybe you're crying here, and on Carbon you still would have been at a minus 60% had you sold everything here. But then you'll see as this comes back down, because it waits to buy back here. You can see that actually we've ended up at about a plus 45%, compared to what was it, Jen? What did Uni get for this video? 0, right? And here, look, it's night and day, right? So like this is kind of what I'm talking about. So Uniswap absolutely wins on the stables, like it's getting it's getting phenomenally good fees and volume when you're doing stable to stable. But for the volatiles, right, for the things where you actually do have an opportunity to buy something at a relatively low price and sell it at a predetermined high price, even if you miss it, right? So in this particular simulation, like, we did miss it. Here, this liquidity provider on Carbon with this strategy that is nearly identical to the one that we had on Uniswap V3, both of them, are crying right now because they like sold all of their ETH at 2,000 when they might have been able to sell it closer to 5,000. And as this comes back, you've got to think about the ETH hodler that didn't sell at all, and has still got all of their tokens in ETH. When this comes back and revisits this range that we set up, the liquidity provider on Carbon is actually ahead by a very, very wide margin, right? So, and that's the point of having this chart evaluated versus HODL, right? We're comparing it to someone who's just held ETH this whole time. And so, yeah, maybe this person who sold ETH could have sold the top. And that's not necessarily a fair comparison because I could force the simulation as the Carbon trader to sell their ETH at that stage. But the important point is that even with these very, very volatile ranges, and even with these deep capitulations and huge moonshot runs where you might be kicking yourself that you didn't hold on to ETH a little longer or sell it a little higher, overall, it still performs pretty well, right? Let's have a look at how that actually ended up. Yeah. So on that particular strategy on Carbon, on the actual ETH chart that we picked up from CoinGecko, using a user-nominated strategy, yeah, sure, it went down as low as -60, but at the end of this period, the strategy is already up 2x compared to HODL, which is a big deal in my opinion. And when we compare that to a standard concentrated liquidity product, such as Uniswap V3, and I'm using that because it's the industry leader, right? We all know that there's a couple of other options. Yeah, in that same range, it went down to -70% and is mostly at break even. Right? At the end of this process, it was actually at -10%. So there is like stark difference here. Right? We've seen examples where standard concentrated liquidity definitely comes out in front, and we've seen examples where it definitely loses. And I think that that's the thing that we need to educate the industry about, right? Carbon isn't an alternative, right? It's not a product that you can use instead of Uniswap V3. It's something that you should use as well as Uniswap V3, right? Both of these protocols have specific situations that they are catering to. And as a trader, as someone who is actually doing stuff in these markets and exercising, your decision-making capacity to try and benefit, there are things that Carbon can do for you that Uniswap can't do for you. And there are things that Uniswap can do much better than Carbon can, and that is more appropriately suited to those types of things. So I think that this was actually an excellent way to round out the presentation. And so if there's, I'm happy to hang out, by the way, if there's anything else that we want to do. But I think that I've been speaking now for what seems like 2 hours, maybe.
2 hours. 2 hours. We also have our community call coming up. So if there are others that we want to really take a look at, and ZeroX kind of added some comments here. I don't know if you're still up and you want to unmute, you want to voice them yourself, or, we can just read them in the channel. But are you still here, ZeroX Bear? Okay. You were saying he would have thought the opposite of what the simulation shows. That they'd be more similar on volatiles, and Carbon outperforms on mean reverting, but Carbon profits from the bigger price swings and eating the volatility. So it's kind of, this is so fantastic, like this tool to be able to gain this insight as to what's actually happening and what you're thinking, whether or not it's actually what, the results would be, and how these different protocols perform, especially when it's your liquidity in them,
Yeah. And I wanted to say, anyone, you don't have to wait for me to add this to my public GitHub. Obviously, there are things that I want to change because it can be better. But if anyone, if you want to start running these simulations yourself, I assure you it's relatively easy. I've got, Jen, you've been running these for a couple of days now. Have you, would you say that it's a difficult thing to do?
No, it's so simple. It's almost ridiculous. Once you get the hang of
Yeah.
it, I think it took me maybe 2 or 3 times to just kind of run through it and like, okay, now I need this pickle, and but once you get into your groove, and it's almost addicting in a way. You want to search charts and really figure out what your strategy is going to be. Well, I do
Right.
anyway. Once the beta launches, am I right in thinking this, and what would I have done in this situation? So no, it's not a difficult process whatsoever. No, and
Yeah. And so,
the columns that you added really quickly, I just want to tell anybody, if you want to add that extra little bit of volatility, like Mark was showing with the CSV, reach out to me and I can walk you through that if this isn't up on YouTube yet. If you want to start getting some CSVs together, then I can help you with that as well.
yeah, and I'll eventually build that as an option to the simulator as well. Like if you wanted to add those 3 columns or whatever. But I think because it is subjective the way that you do it, it's almost better to do it hands on. And yeah, the way that Jen will walk you through that process, I think is better than if I was to generate it myself. But yeah, if anyone wants to do this, as you can see, it's ready to go. It's just it kind of looks frightening because you need to scroll through a whole bunch of text. But really, it's just about copying and pasting different file names into the very last cell in these things. So if you want this resource, I'm happy to give it to you. Just be aware that it still has every once in a while some weird bug will surface. But then, if it does, you can also send me your pickle file and and any error message or anything that were generated, and I can help you work through it. So yeah, I would say like it's not like ready for prime time, but for people who are interested, I would say it's absolutely ready. Right? It still does everything that I want it to do. I'm just trying to package it up and make it a bit neater. Some of the code is still a little bit verbose and so on. So it still needs to be tidied up. But it can still do stuff. And so if you want it, just ask. I'm very happy to give it to you, and we can set up a call and work through it together. Whatever you need, I'm very happy to support it.
I've offered to do that with a couple of community members also, so don't be shy. You can reach out to either one of us to jump on a call, and I can walk you through it now as well. So awesome. Well, thank you so much, Mark, and thank you to everybody who joined us. Thank you, Xerox Bear, for bringing your requests and things and for jumping up here and setting your parameters. It was great to actually have someone from the community, from the call, getting up and creating their own strategy versus just us. So definitely, like, huge thank you for joining us today. And again, thank you to everybody else. We have a community call on Monday, so a little less than a week from today, and we'll probably maybe continue with a couple different simulations unless we decide to go a different route. But I will keep everyone updated on that and set an event here on Discord also. So Mark, thank you so much for your time and for creating this tool and for walking us all through it. I definitely appreciate it. I have all the links and things. If you just want to send it to me, if anybody wants this, Xerox Bear, I'd spoken with you about it. It's the alpha build, but I am more than happy to send it on Mark's behalf. So thank you, everybody.
One of the things I'll do as well after this call completes, I'm going to quickly run some of these GIFs, or actually all of the GIFs that we generated. I'll run them through. I'm just going to compress them, and I'll put them in the Discord, in that Discord chat as MP4s. So if anyone wants to look at them in greater detail or whatever it is, then you can. And if you want other things like the logs or PNGs or let me know.
Awesome. Thank you so much, Mark. And thank you again, everybody. We will hopefully see you on the community call and talk to you in the meantime plenty.
Ciao. Thank you.
Thank you. Thanks, Glenn.